Hey, good morning. This is Mayor Valensky with Driving Markets. As per usual, I'll give you the usual warning that anything said on this particular video publication is an opinion only, and you should not necessarily act on it. If you want to act, then you should seek independent financial advice. So last night, as far as the US concerned, the well-awaited minutes were produced from or issued by the FOMC in New York, and of course they come out with the expected announcement that they're going to start tapering the capital or cash injection that they did through the start of the pandemic, which was $120 billion per month. There's never been this amount of money injected ever in the US economy, and analysts and economists just simply don't know where it's going with all this injection that's happened with the 1.9 trillion and the 120 billion and other trillions and billions of just printing money for them to get out of the banking crisis in 2008, 9, 10 onwards, and then the pandemic, and we're talking about trillions and trillions. So I'm not sure where that's going, and we don't know the full impact it's going to have on inflation. As regards the markets actually moved up. So why would the markets move up if the Federal Reserve is pulling money out of the economy and it's going to restrict and reduce its bond buying program? Quite simple, because investors viewed this as a positive move, because the Fed would only do this if the economy can withstand this move, and therefore the economy is in very good stance. You've had most companies reporting now, 82% of them have come up with positive results. You've got employment, full employment rising, full economy, everything looks rosy, and all the investors say, let's just go and buy the stock market. I am not from that particular camp. I'm of the camp that it is all too good to be true. You just can't believe what's going on here, that the economy is being pumped in with huge amounts of liquidity, and that's keeping the stock market and asset prices rising. You've got bond yields that are rising, so bond prices are falling. As a result of that, people look at the risk premium. What's the risk premium? They have $1,000 or $10,000 or $100,000 and say, okay, well, how much am I going to risk, and where would I put that? Either can put it into bonds, bank account, or into stocks and shares. And because the economy is doing so well and being pumped, has been pumped and being pumped with huge amounts of billions, so therefore people say, you know what, the risk premium on stocks is worthwhile taking. It's a lower risk premium, so let's go for it. So everyone's buying all the stocks, the high techs, etc., etc. There's one fact that people also, investors, have ignored, and it is significant, and that is the shortage of semiconductor chips on everything that we use, whether it's a mobile device or whether it's devices at home, in the car, at work, computers, machinery, all the way up to nuclear power stations, are all functioning on the back of a semiconductor chip. However, the semiconductor industry has a massive shortage of semiconductor chips, and that's not yet been borne out in any price whatsoever across the market, and that could be a major crisis. I was talking to a couple of clients yesterday, and I was talking to a couple of analysts, and this is a fact that's been totally ignored. It is so significant, the shortage of semiconductor chips, that the downturn in the economy and the impact on the economy and obviously the markets could be extremely significant, greater than the 2009-2010 banking crisis, and could be more significant than the effect on the markets of the pandemic crisis. So that's these little facts that are being ignored by everyone, and as an investor, you have to be aware of what's going on in the periphery to see where exactly the risks could be to your investments and your strategy and tactics. So as I said many times, when you trade, be very careful. Most traders lose money, as I mentioned on practically every video, simply because they either overtrade or the size is too big and they don't put the necessary stop losses on. So that's it for today from Mayor Valensky Driving Markets. If you need to get hold of me, you can contact me on WhatsApp. I've also have Instagram, which is Valensky Mayor. That's VELENSKI Meyer, M-E-I-R. That's my Instagram account. You can contact me on LinkedIn under my normal name, Meyer Walensky. And what else can you contact me on? Search me out on Google if you have to. And if you want to subscribe, of course, subscribe. And look forward to speaking to you soon. And good luck and have a good day.